Hello once again, Mark Espy, MarketTamer.com, and also known as the Robinhood Trader. We're looking at the CompQ. Must remind everybody this is for educational purposes only, not to be construed as a recommendation to buy or sell anything. Please do your own due diligence. Another big down day here in the CompQ, followed by the setup, two narrow range trading days, spinning top, and a high wave doji right at the confluence of the 50 crossover of the 200 simple moving average. As we know, the CompQ lagged behind on that. The SPX and the Dow crossed over much sooner than what this index did. So that's quite significant. So where are we going to go from here? Well, first of all, I think we're going to get follow through on this down move. The first area that I would look at would be the double bottom support from May and June, and that's at 2150. We also have the spike low from February early this year at 2100. And then we just put in a recent low here at 2062. That happens also to be a 50% Fibonacci retracement level, so that's significant. There is also some symmetry, some great market symmetry that lines up at that level from September and October of 2009. So this level here needs to be reckoned with. If we happen to push below there, we have a significant gap from late September and early October of 2008 between 1900 and 1950. That is also proximate to a 38.2% Fibonacci retracement level. And then if we go that far, we're down to 1265, which is the March 2009 low. On the upside, we put in a recent high at 2260. We also have this double top, which is left shoulder, right shoulder. You can see this better if you go with the 5-year chart, but this is actually the left shoulder and right shoulder of a head and shoulders pattern. And that is January and June of 2010, and that's at 2340. Then we go up to our 2435, which is right at this area, this swing high, and then finally the April 26th high of 2532 right here. We have a crossover on the stochastics above the in the overbought area, and it looks like it wants to come back down, and it looks like, again, the MACD wants to also do that. The MACD line looks like it's turning over and might cross over the signal line, and we have a retracement of the histogram back toward the zero line. So in summary, where is this going? My best feel is we have to challenge first 2150 and this level back here at 2100 from February, and then the recent low. I feel we have enough strength to come down here and retest the recent low, and that's quite significant support at 2062. If it breaks below there, then it's really going to be bearish. So this was not a surprise to me. I felt actually last week we were going to do this, but we did push up here a little bit higher, tested the bottom side of the 200 simple moving average, which was one of the scenarios that I pointed out. But when we put in these two narrow range trading days right at that level, that was the setup for today's down move, and that's exactly what occurred. Again, I was quite surprised at the magnitude of the move, but I was not surprised that we did get a move to the downside. I would suggest that you be prudent out there, and if you do have some long positions on, you might want to consider lightening up a little bit, or maybe hedging and get net delta short. But again, that needs to be your choice. You need to do your own due diligence on this. So I wish you a good week of trading next week, and I look forward to talking with you next week. Take care.